Hello guys, welcome to the Trading Parrot. Tomorrow are the elections. It's pretty much expected that this week is probably one of the toughest weeks to take a swing trade. And in today's video, we're gonna look how we're doing with the CME gap, with the 4-hour time frame, the daily time frame, the setups. But we have to keep in mind that over this week, many technicals are going to be all over the place. And I think the goal for this week is not to dig a hole in your pocket. Survive it, observe the markets, learn from it, and keep an eye for things that are currently developing, which is precisely what I started doing in yesterday's video, which went live in CoinBureau Trading. If you're new to the channel, I publish videos in the Trading Parrot, of course. I try to aim for 3 videos a day. There are exceptions, of course, but at least 3 times in a week I publish videos to CoinBureau Trading. And if you don't want to miss videos like this, the pivotal week ahead with all the alpha for the week, and neither the updates here, I suggest you subscribe both. This morning I published on my Telegram as well that the short-term liquidity is piling up at 67, overlapping with the CME gap, making the argument for the price to go there and take care of business slightly higher than yesterday. We'll look into that in just a moment as well. We'll talk about the alpha for longs, the delta, how it's increasing, where are the areas potentially with high likelihood for a reversal if we were to go lower than where we are, which I think there is a good chance for that, to be honest. And today is Monday, so we have to keep an eye on how we close the weekly time frame. There are good things and there are bad things, and you may want to hear this one before you switch on to the next video. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And in yesterday's videos, we got 509 likes, which is amazing, guys. And since in that video, I promise I am going to sing Can't Take My Eyes Off You, this time using a guitar, I will do so. But make sure that in the upcoming days, you're keeping an eye on my Twitter, because the video is going to go there. I cannot sing this song on YouTube and risk getting a copyright claim and have to deal with the situation. So I'm gonna make it easier and upload the video to Twitter, keep it for there for a while so you can have a laugh. Hopefully you enjoy it. Let's get into the content. Let's look at the big picture, monthly time frame. You can see that the area that I've been wishing for one day we turn into support, which is 71.355. That is the highest close in a monthly candle for Bitcoin, the full history of Bitcoin. And because of that, it gives me still stress that we are not managing to break it and hold above it. But the good thing is that we are not very far from it. If we could consider this a monthly rejection, it's nothing that you cannot undo in a single month. Indeed, the previous month, the width of the candle was $14,000. And so far in October, it's been only $4,000 and only $1,007 coming down from the closing price of October. So I could say that if in November we have taken a bullet, it has been a pretty small considering the previous width of the red candles. This one, for example, was also $14,000. This one moved down $16,500. So we should be happy that it's just 10% of that damage before. Interestingly, in the past days, we peaked at 22 in searches about Bitcoin, and now we're coming down to 18. And I will have expected that with the elections, people are turning their faces into Bitcoin. I guess now that we are taking a retracement in November, people are again thinking it's the end of everything. Levels I really want, and I'm hoping that we can protect during this week, and I'm talking about a weekly close above that level, starting with the short-term holder realized price. Guys, this is the average entry at the moment of the short-term holders. Short-term holders are a combination of swing traders, some professionals there, but the vast majority are weak hands, lettuce hands, and if the price comes too close to 64.1k, which is where the short-term holder realized price is now, it can turn things into a snowball effect of sellers. So far, we are still hovering somewhere in the 68ks, at least now that I'm recording the video. So we are 4k away from those levels that could increase the fear potentially into extreme fear. And just this morning, I was seeing the stochastic RSI monthly in the process of crossing up, but with the move down once again below 69k, it's still with the mouth open. We need November to close with a cross up, a bullish cross. And of course, we're gonna get that if Bitcoin is above 69k. I already saw it at 69k being as a bull cross. 68k and beyond that, it opens the mouth once again, just like we did in October. We couldn't produce the bull cross. And if you wonder what good things could happen in Bitcoin if we close November with a bull cross, go no further than 4 days ago in the channel The Trading Parrot and look up for this video called Huge Bullish Signal. I break down fully what could happen based on past performance if we get that bull cross on the stochastic monthly, which typically happens in the middle of the bull market. And let's go to the CME gap because I want to answer as well a few questions that you guys left in here. Very interesting comments coming up here on Telegram just a few hours ago. And I think it's a fair question. But let's go first with the update. This weekend, we closed on Friday the price at 69.5 and the price opened at 68.999 and immediately it went up to close the gap. So from this last weekend, we don't have any gap. That means that there is here no incentive to go up or lower. But from the previous weekend, we can see that we still have a virgin CME gap in here. It formed from the closing price of 67.3 up until 68.2. That's roughly 1000 CME gap. It is juicy and the price is just right there next to it. And why is it taking so long? Why it didn't go straight into it? Because there was no other motivation to go there. There was at some point more motivation to look for a long. During these days, we were looking for a long. We confirmed the breakout to the upside. We talked around here about this being a trap for bulls, and then we came back down. And we are just roughly $345 away from starting the consumption of this up until 67.3. I remind you, these are CME prices. They are more expensive than on spot on futures on normal exchanges. Sometimes even $700 more expensive. Typically just $200 up. And I think the CME gap is still there and it's very likely that we're gonna consume it sooner rather than later. On the MACD, you can see that I have flagged each and every bear cross in the past 8 months. For our convenience, it makes it so much easier now to understand what can be the drawdown from each of those signals. We had one in here, which we said we are not gonna action because we were expecting very small drawdown. You can see that immediately after it printed the bear signal, it went straight up with almost no drawdown. Luckily, we managed to dodge that bullet and not enter in a short there. We have a bull cross and we confirm on Sunday a bear cross on the MACD daily. You can see as well that the histogram is starting to turn into the red. So far we have 1, 2, 3, 4, 5, 6. It's gonna be a week of daily red candles, no exceptions. And I think a lot of this is driven by what's going on in politics in the US with the elections. Of course, there are some fears that things might be flipping. We're not gonna talk about politics or personal preference at all, but we have to say that since things started showing less of a hedge towards Trump, the price started just collapsing. And that is because people think in general that if Trump loses the elections, Kamala is gonna be a lot tougher against crypto and potentially produce a big drop in the price. Some people think that, and some other people think we are also going to drop, but we are going to still recover. It doesn't matter who wins. At the moment, this is the speculation that things might be flipping. I'm pretty much sure about that. Anything that can bring reassurance that Trump can win could flip things absolutely the opposite. Think about from 7 to 14 days just of green candles. And looking at the 4 hour, you're gonna notice in here that against this trend line, we have confirmed a breakout on the 4 hour. This is to the upside and it's a bullish breakout. And you might be wondering if this happened at 1 a.m., why you didn't say anything this morning. The reason is because we also have this trend line in here. We came back within this range. We broke down the global support, which turned out to be a fake out to the downside because we came back inside and we produced a breakout. But in this green candle, all I was thinking is we have a fake out to the downside. This to the upside against that resistance can also become a fake out. And what I tried to prepare you yesterday and in the past week, I've been talking about this all the time when referring to RSI 4 hour daily, MACD daily, is that we are going to see a lot of crazy signals all over the place. We have 3 crosses on the MACD daily in just a time span of roughly a week. And on the 4 hour, we got a global breakdown on Sunday just to get a global breakout to the upside on Monday, the day after. And right after that, it hits resistance and it starts rolling over, still not re-entering any previous range, but still in that area of I really don't know what am I doing. All I can say is that in here, there are now longs trapped. These longs that enter with the 3 green candles on the 4 hour that now are bleeding leading are very clearly appearing in the liquidity pool. And thanks to these longs, they are making it so much easier now for the price to come back down and fill the gap, because the gap is pretty much somewhere in here. Support is at 36. I have it flagged here with this line that is 67.9. So if we were to go and fill the gap, once again, that RSI might come back down to the global breakout area, in which case we are really gonna have to move this support somewhere in here to see if the RSI reverses there or if it continues to break down to new lows. And if you are confused, sure, then what is the outcome? Am I going long or short? And the short answer is don't do anything. The price is all over the place. When we trade against an edge. We trade against a confluence of things all together. We wait for confirmation. But at the moment, the RSI is just all over the place, and there's no clear indication of what's gonna happen after. Things that could make me change my mind slightly is if there is a clear winner tomorrow, confirm, and then we see an explosive move in one direction, taking out some big level of liquidity, but then the market ends up going in the supposed direction that you should go, or totally the opposite. This kind of situations that trap a heck of a lot of additional people. For example, a Trump win with a move down looking at like a sell the news event, and then sudden move above with a global breakout in here confirmed with volume. If we see that tomorrow, believe me, my narrative will change 180 degrees. I continue to say that on the daily, I really want the RSI 50 to hold in here in this channel for continuation into the extreme overbought areas of 78 at the top of the channel. I have the feeling that for that, we need a positive outcome from elections and a positive outcome from rate cuts. A break below RSI 50 can make things very complicated because the global support on the daily RSI is at 28, and thanks to all that we have run to the upside, the fall is pretty deep. You can see that now a fall to RSI 28 on the daily takes us straight into 57. That will take a lot of liquidity from longs. That was previous support in this area in here, also in May. If we see a sell-off, I will be publishing in my Twitter or Instagram or Telegram whenever I'm adding to my long. Open interest continues to be in the breakout area, but we are getting very close once again to the 21 billion, which was the resistance in the past 8 months. So I will say we need to be very careful for if we see the open interest getting below 21 billion, not just because that is the top of the range, but also this line in here has been our support of the ascending wedge. So if there is a massive collapse in the price, breaking below here, we're not just re-entering the previous range after having a breakout successful, but also we are breaking down from the ascending wedge, which in theory can take us back into 15 billion. 15 billion is the area of reset of the past 8 months when it comes to open interest, but it's also the area for a reversal to the upside. So if you are that kind of lucky guy that is sitting in your hands and you've been all this time betting against the market, and we saw a flash of the open interest that big, that could become a huge opportunity. Of course, at the time it happens, everything needs to be looked at with a magnifier glass to understand why is it happening and how low we should go. Past performance doesn't guarantee future one. The big whale explorer continues to say that the whales are accumulating, and they are accumulating huge amounts compared to what they were doing in the previous 8 months, which was pretty much only distribution. Long-term holders approach the elections just going sideways. There hasn't been any significant developments, and the weekly megaphone pattern still shows the price in the breakout area, decision time, but we have an inverted green hammer in here, which is quite bearish, and we have a red hammer. So this is showing us that although we are still there pending from a thread, in case they didn't like something, one of the outcomes this week, then we have already the narrative to say that this week became just a liquidity hunt to get all those people dumped. But at the same time, there is room in here for reverting this whole situation with a huge green candle, just targeting hopefully a higher high relative to this and relative to this one in here in particular. In other words, an all-time high. At least that is what the bull market support band is calling for with the bull cross. Let's go to the weekly, and we close the weekly at an RSI of 58.42, which is above the support of this trend line in here. So that is pretty cool, but we started the week with a move down, breaking the support. Of course, we have ahead the full week to fix that or to put the last nail in the coffin in and call this whole thing just a dead cat bounce with potential further move down on the weekly time frame, which could become really painful, especially considering that if that happens, most likely then the RSI stochastic on the weekly could also put a bear cross on the top of the range. That is just a possibility. I think the indicators are saying we are ready to confirm that, but if we make a decent move up, we are ready to undo all the damage too. And I think that reflects currently the psychological situation among traders. I keep reading on my Twitter crypto timeline people saying completely contradictory things, like for example that we have the largest wall of buys, that the sentiment has completely flipped. On the other side, we have huge selling walls and record amounts of asked liquidity, people putting limit orders to unload their Bitcoin. And we also have the ETFs with record accumulation in the past week, BlackRock buying like crazy. So if you have a bias and you start liking those tweets, you're gonna start just seeing the bullish ones or the bearish ones, increasing your confusion and increasing your bias, not helping you see the wide picture. And that's why I look at the indicators, because at the moment the indicators are saying that there is a huge battle and things are pretty balanced between bulls and bears at the moment. Of course, if I start seeing things flipping, I'll be sure that you are the first one to know it in my 3 social networks. By the way, the links are below. Do not join any dodgy link that anyone posts on comments. That is their recipe for you to end up getting scammed. So let's look again at the liquidity pools. How are things developing on the top end on the scalping chart? Unfortunately, there is not much liquidity above the price that can compete with what we currently have at 67k. 65k is quite heavy at the moment, and that's it for the scalping chart. I would prefer that we just go to 67 and that's it, but I'm afraid that it's not very difficult for the price to get to 65. Hopefully that is the end of it. Remember that at 63, 64 actually we have the short-term holder realized price. On the longer term, the swing version of the trading difference chart is showing us a lot more clear 65k being really important. The 67 that starts there right when you finish with the CME gap, unfortunately liquidity starts piling up towards 65. I think they just need a good argument to scare people just so they can hit 65. I am hoping we don't have to go that low as 60k, but this is the week where anything can be possible. Going to the delta longs and shorts, we can see that we are right there in the area where my alpha has worked for quite some time. This is beginning of September, and I left these red lines in here flagging where we are entering in this channel, and it keeps going higher. This means that we have excessive amount of shorts in the short term, and this is an opportunity for the price to do some leg to the upside. That could be just a dead cat bounce hitting 71k, or it could become the beginning of something if it's supported by new events that are bullish coming from politics and economy. Do I think that because we have excessive shorts this cannot break down and continue to the downside? Absolutely not. You can see the previous time that we have a similar move in here, which was from May, and the last time that this worked was July. But eventually there is a reset where we actually break the support of piling up more longs and less shorts. This is a channel to the upside, and eventually it breaks in August, and then we start a new channel. So I guess what I'm trying to tell you is this is an opportunity if we bounce from here, sure, but if it bounces just a little bit and then it breaks and it resets just like it did there, it can also hurt. And that's why if you were to use this at this point in time with the risks that we have in the market, have a plan B. Are you gonna DCA? Are you gonna hedge if you're wrong? Are you gonna put a stop loss? Or are you just wishing and hoping for the best? Which is my favorite answer sometimes when I ask people. How is the order book on fire charts one day before the election? Let's look at the 6 months. We have the selling wall with 83 million, which relative to 123 million is still like 2/3. So it has reduced fairly enough, but it's not gone. Definitely. It's still there. And support at roughly 66.7, interestingly, is the best support we have, which is 52 million. Let's zoom in this area in here. You can see that roughly at 67 is where that support is. And then below there is 43, followed by 26, and then it becomes like just peanuts in terms of support. Around here we have 46, 83, and 52. So 3 bands that are quite substantial that we need to hit. Just remember, not always you have to hit them. Sometimes they pull out right before getting hit. What are the whales doing? On the 6-month chart, you can can see that the purple ones continue to buy very slowly but steadily. There's been some sell-off from the 29th of October, but it continues to be in this central line just going up and up only. Whereas the largest whales, the brown ones, you can tell that they peak roughly at the same time with the purple ones, but they have sold slightly more than the purple ones. CoinGlass liquidation levels, we have one huge one here at 61.6. I noticed that they changed kind of the implementation of this. It looks very different today, and also the levels have changed, so probably the algo behind this has been updated. We have a significant level of liquidation of shorts at 73.3, and in terms of fair value gaps indicating volatility is on the horizon, we can see that the only fair value gap that we have next to the price is right below us, pretty much covering the CME gap. We already took the one above, and once again that CME gap is coming up as a potential target. 71.6 is where the price needs to go to take the last fair value gap above the price, and once this brown is gone, the price needs to go below 65 to start taking this. So although it's impossible to tell what comes first, I have a bias to say that first we take this, but I might be wrong, and once that is gone, the price needs to do a huge move up or a huge move down. So liquidity is pretty much, volatility is pretty much guaranteed. The delta from high block capital is also pretty substantial. You can see it in here. It continues to increase. Now it's 470. At some point it was like 600. I saw it one day. This puts at the moment the shorts at risk, and I wanted to pay special attention to these three different charts of liquidations. As opposed to trading different, this one doesn't offer auto updating or live data. You have to refresh it manually every time that you want to see new data by hitting this button. I still use it, I still love it. And don't forget that there is Cyber Monday on trading different. In 2 days that is gone, and with the link in the description you get additional 15% on top of this already discounted price. So in terms of liquidity on the 1 month on high block capital, we have that 65 standing out right there with 237. Above the price the 74, and below the 60 is not as heavy as 65. Let's move on to the 6 months, and we can see in the past 6 months only liquidity at the top reaches the yellow levels of over 2 million. To go back into yellow going down, we need to go below 50s, and on the 1 year the only area that gets in yellow is 74k. Below 50s is not becoming even yellow, it's pretty small, although if we hover it we can see that it's 5 million versus the top that is 7.35 million. I think the way they are coloring these things sometimes is a bit confusing. You have to look at the numbers too. My point is, in order to hit big levels of liquidity, they really have to cause panic on the streets, extreme fear to make a move of over 20,000 to hit those lows. Yes, at 65 and at 60 there is something, but if they want something as substantial as the top, they have to make a way bigger move, and that is not always easy, even if you're the market maker. And I need to reinforce what is the range for the month of November. For bullishness, we have a top at around 91.1k. That is from CPR monthly levels. We use this model all the time, and if you wonder, can Bitcoin really reach the top 3 level of resistance? Yes, it has done it. Like for example in here, you start the month at 43 and you end the month at 64. Yeah, it's doable. Of course you need the right narrative, and I think the liquidity levels here from 70 to 77 and then 80 to 82 can at least get us into the second resistance, which coincides, is 82.3. Now if people get really disappointed and well start distributing like crazy overnight, then I'm pretty confident that we could lose the pivots that end at 66.2. We have 61.7 first support followed by 52.9, and the last one is 47, and at that point 47 wipes completely the lower end liquidity that is here. There's nothing below the price larger than this area. So we have CPR there, we have CPR in 82, that's the second resistance, and there is one at 91k, and at 91k there is no further liquidity to the upside. So I guess you can start calling at this point that you are in price discovery. Guys, if you want to trade Bitcoin or altcoins, look no further than Bybit. Bybit is a top-notch exchange that I use to trade with my bots. I use it to trade manually, and if you use the link in the description you can claim up to 30,000 in rewards and the lowest fees as well, which are there to help you increasing those profits. If you connect Bybit with my website after using my link in the description, you don't have to pay any subscriptions to get access to 100 indicators and perks to trade with bots. If you want a hassle-free exchange, go for Bluffing. This is the one I'm using. I open 2 accounts in 5 minutes, deposit, trade with leverage, just 5 minutes. bonus. No need for KYC, no need for stupid VPN subscriptions, nothing from anywhere you live in the world. 10,000 in bonus using my link and the lowest fees as well to trade. Don't forget the sell from trading different. The 15% additional is right here and you have 2 days to catch that discount as well. I'll see you on the next one. Bye bye.